Okay, hello and welcome everybody to today's special educational presentation on pivot points. Today we're going to be talking about this classic technical indicator that's used by everyone from floor traders to major institutional traders at banks and hedge funds and so forth to retail traders like you and me. So today we're going to talk about pivot points, and this webinar is brought to you by OctaFX, the award-winning Forex broker, offering you some of the lowest spreads in the industry. So without further ado, let's jump right in and start today's lesson. A couple of quick disclaimers. First, trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. Shouldn't invest money that you can't afford to lose. Secondly, hypothetical trading disclaimer: the information in this webinar is provided as general market commentary, doesn't constitute investment advice, it's purely educational. Okay, first up, let's talk about why use pivot points out of this jungle of so many different indicators. Why pivot points? Well, they're a very strong tool for gauging the bias in the market, whether you're in bullish or bearish territory, which side of the market you may want to favor. So that's one reason you want to use it. And then secondly, it gives you key support and resistance levels. So you get these nice horizontal key support and resistance levels. So what you often see is price bouncing off a pivot point when initially tested, and then it often continues to trend to the next resistance level or down to the next support level once it's trading above or below the pivot. One of the nice things about pivot points is that they're horizontal, as I mentioned, so unlike moving averages or oscillators, they remain static throughout the day. Moving averages, of course, will be constantly changing, the same with oscillators, of course. Another really useful feature of pivot points is that very often they coincide with other technical indicators. So what you might have is a major pivot point coinciding with a Fibonacci level or a moving average. So that's just going to serve to strengthen the potential support or resistance from that level when you have this confluence of indicators. So that's a very useful feature of pivot points. Let's talk about the origins quickly. So pivot points go back to the days of floor traders trading open outcry on the exchanges. These are the days before computers and stuff. These were often calculated manually. Thankfully now we have indicators that do that for us, but back in the day they were done manually. So traders would use an average of the previous day's high, low, and close to calculate a pivot point for the current trading day. And having established this pivot point, key levels of support and resistance above are calculated. Typically there's 3 levels of resistance above and 3 levels of support below that are calculated, and we'll look at a chart in a second so you'll be able to visualize this. Let's go through the formula quickly. So the pivot point itself is just an average of the high, low, and closing price of the previous day. So the pivot high plus low plus close divided by 3. The first support, or it'll be referred to as S1 commonly on the chart, so just keep that in mind. When you see S1, it means the first support. So S1 is the pivot times 2 minus the high. S2, support 2, that's the support beneath S1, is the pivot minus the high minus the low. The first resistance, R1, is the pivot times 2 minus the low, and R2 is the pivot plus the high minus the low. So fairly straightforward calculations, and thankfully we don't have to do these manually anymore. So this is what it looks like on your chart. Typically you have a daily pivot level in the center, and then you have R1, R2, and R3 above it, and being resistance 1, resistance 2, resistance 3, and S1, S2, and then there's an S3 beneath this, and as I said, they're horizontal. Let's talk quickly about installing pivot points custom indicator in MT4. So in MT4, go to your file, open data folder, MQL4, and then indicators, and then you can just drag your pivot points custom indicator into that folder. So insert your pivot points custom indicator there. Then you just need to restart MT4, and you find it. If you want to put the pivots on the chart, you go to insert and then indicators and then custom, and then you'll find it there and you'll be able to put it on the chart. So it's fairly straightforward to get set up with the custom indicator there. Okay, next up, guys, let's talk about pivot point strategies. So in a similar way to the 200 period moving average, pivot points are like a line in the sand where above the pivot you're in bullish territory, and below it you're in bearish territory. So technically, when you're trading above the pivot, you're going to be favoring trades to the long side, and when you're trading below it, you're going to be favoring trades to the down. You're going to be favoring sell trades. So above it the bias is bullish, below it the bias is bearish. Fairly intuitive concept, right? A classic strategy when you're using pivot points is to wait for price to move above or below the pivot. So let's say the price moves above the pivot and then retraces to the pivot. The entry of the trade would be to enter long at the beginning of the next candle or the next bar, whatever form you're using to measure the time period on your chart. Conversely, if price moves below the pivot and then retraces back to the pivot, you enter short at the beginning of the next candle. In terms of your stop loss and profit target, if you're long, place your stop loss order below the low of the candle that retraced to the pivot. If you're short, conversely, place your stop above the high of the candle that retraced to the pivot. Classic profit target strategy would be to set your profit target to twice your risk, and keep in mind that it's a good idea to take some profits at each resistance level if you're long, or at each support level if you're short. So let's imagine price crosses the pivot from the downside to the upside, it retraces to the pivot, you get long the next candle, and then in terms of your profit target, you're looking to take at least twice your risk, and you're looking to also take some profit at the first resistance and the second resistance, potentially even the third resistance levels. So that's one basic strategy. Pivot points can also give you some nice entries for counter trend trading. So the first one, you were trading basically in line with the trend and you're looking to capitalize on the trend, but pivot points can also give you some nice counter trend trading opportunities, or reversal trades you might call it. So for example, for a long trade, you could look to buy following a bounce off of S3. That's the third support, that's the deepest level of support. So you have S1, S2, S3 is the lowest one. For a long trade, or for a short trade, sell following a bounce off R3. So similarly to our first strategy, look for the bounce and then get in on the next candle, whether you're getting in to the long side or to the short side. When I say long, it means getting in as a buyer, a buy trade, and when I say short, I'm talking about getting in as a seller. So for the long reversal trade, similarly, you set your stop loss below the low in the bounce off of S3 or the third support. And for the short reversal trade, you set your stop loss above the high in the bounce off of R3, the third resistance. Set your profit twice your risk, as with our first strategy, and take profits at R1 and R2 if you're short, and at S1 and S2 if you're long. So imagine you're coming from selling at R3, and you're looking to take your profits at R1 and R2, and then if you're buying the bounce off S3 or the third support, you're looking to take profits from your short at S1 and S2, support 1 and support 2. Okay, now that we have these rules laid out, let's jump over and take a look at the chart, and we'll be able to visualize this and get a clearer idea of how all this works. Okay, so here we are. We've got the pivots drawn up here. I'll just go back quickly and show you again how you can add custom indicators. Open data folder, you go to MQL4, indicators, and then here's all your custom indicators. And this is where you drag your pivot point custom indicator. And then to add it, you just go to Insert, Indicators, Custom, and it'll appear here. So here we have, we're looking at the pound against the yen on the hourly chart. Here we have our daily pivot level. Now let's take a look at what happened on this chart in terms of pivots and in terms of the strategies that we were talking about. So here's the daily pivot. So above here, the bias is bullish. Below here, the bias is bearish. So what happened here? We saw price come through here, came up above the daily pivot, and we got our trade entry because we saw price come above and it retraced back to the daily pivot. So what we wanted to do was to get long according to our strategy, the next candle. So the next candle opened here, and as we can see, price did go up pretty smoothly to R1. You could have taken some profit off at the R1 level there. Price continued higher, roughly up to R2, and before taking a bounce back. We talked about stop loss and profit target. You would have want to put, when we talked about putting your stop, you were supposed to put your stop below the low if you're getting into a long trade of the candle that crossed the pivot to the upside and then retraced back to it. So your stop loss order would have been just below the low of this candle. We also talked about confluence briefly with other indicators. We're looking at an intraday chart here. We're looking at the H1 chart, and an important moving average to look at for intraday charts is the 21 period EMA, and we can see that there was some confluence between the 21 period EMA and the pivot point here, providing further support to the downside. So again, I'm just going to pull this in. Daily pivot, first resistance, second resistance, third resistance, and our first trade, you were looking for price to come up through this to retrace back to this key level, the daily pivot, and then you're looking for a bounce off that, which did indeed happen in this instance. Let's take a look at another chart here where we have an example of where you might have got into a reversal trade as opposed to a trend trade in the case that we were just looking at. In the case we were just looking at, we were trading in the direction of the trend because remember we're favoring the buy side when you're above the daily pivot. So here, price comes through the daily pivot, continues trading higher, and with our reversal trade, remember we were looking to sell the bounce or sell after the bounce off the R3 level. So we had price came through, traded up, nice fluid move all the way up to the R3. So here was our potential opportunity to get in on the short side and get into a reversal trade. So price came up through here, went through the R3, and then our entry would have been here at the beginning of the next candle. And then as we can see, price continue to sell off from that point, and the logic of this trade, part of it is that you are looking to take profits from your short position at the R2 level and the R1 level. So here the bias is bullish, but we're doing a counter trend trade when we see that price has gone all the way up to the R3 level, it's traded above it, bounced off it, it's come back below it. So our entry was the next candle, and then price sold off for these 3 hours because we're looking at the hourly chart, and it looks like it may have found some support at the R2 level. So that's it for our pivot point presentation today, guys. I want to thank everyone very much for joining us. If you have any questions, do email me at webinar@OctaFX, and otherwise I look forward to speaking to you again at the weekly forecast webinar on Monday. Good trading for the rest of the week, and thanks for joining us.